There we
There
go.
we are. All right, perfect. Okay, so life sales reapers, we're going to talk about life insurance. Like I said, we're going to cover a broad overview of the things we're going to talk about, and then we're going to narrow it down into specifically the type of insurance, final expense insurance that we're dealing with. So kind of the layout, I'm going to tell you a little bit about myself. Dawnette will tell a little bit about herself. We're going to go over what is life insurance, what's the concept of life insurance, what is final expense, how they relate to each other, how the final expense works with Medicare clients compliantly. Obviously, like I said, some of you may be doing Medicare, some of you may not, but we do cover, the cross-selling aspects of Medicare to final expense and how to stay compliant. We're going to go over the type of clients that need final expense. That's really important. Understanding the client you're talking to, it's going to help you sell final expense because people buy final expense for different reasons at different stages of their life. So we're going to talk about those things. Carrier product review. We're going to go over a little bit about the carriers. We've got a list there of about 5 carriers that we are core carriers that we deal with on a routine basis. I understand that some people, like I said, have sold final expense in the past, worked with other life carriers. I always like to break it to them this way. Think of this as like a Ford lot. We sell Fords here. Across the street, they sell Chevy. If you want to sell Chevy, you're welcome to do so, but you're going to have to go to the Chevy lot. Here we're selling Fords. So these are the carriers that we're dealing with. These are the ones that we expect you to become proficient in. We're going to go over underwriting. We're going to talk about the different types of underwriting that's available, and we're going to talk about different underwriting tips and tricks that's going to help you get policies issued. Introduction for myself, I started back in the industry back in 1996, 97. Started with Mutual of Omaha. I was a captive agent at the time. I was trained
The
on
dollar sign.
every aspect of insurance: life, health, disability, long-term care, Medicare supplement, that sort of thing, ancillary products. I became a field trainer. Started actually taking agents out in the field, teaching them how to conduct appointments, run appointments, write business, that sort of thing. Then I got my securities license. I started to do investments. I was what they called a insurance-based advisor. So I helped people with their insurance, also with their investments. And then I worked for a company by the name of Capital Financial Services. I was doing investment seminars, going around from all sorts of different cities in my state and doing these big presentations on safe money choices, how to protect your assets against market loss. And then COVID hit, and they said you're no longer going to meet people, in volume like that. You're gonna have to do something different. So I ended up getting looking for something that I could do 100% online. And I got into the Medicare industry, and I saw a lot of Medicare agents that were good agents, had the ability to sell, did really, really well, but they lacked training in these other areas. They didn't have the ability, they didn't have the knowledge to cross sell life insurance or annuities or that type of thing. So that set me off on a new kind of mission in life on teaching people how to cross sell. And as a result, that brought me to Orca. And now I'm cross training agents, primarily Medicare agents, to cross sell final expense and teaching final expense agents how to cross sell Medicare. The end game, obviously, is to be able to do a triple thing where you can do Medicare final expense and help them out with their investments, do annuities too. So that's me. Donna, you want to give a little bit of background about yourself?
Sure, why not? Dawnette Avery, Moape. Not gonna be as extensive. I've been doing insurance for quite some time, dealing with life, Medicare as well. And I know how to do final expense. I'm eager to learn about the annuity side as well, that Jacob gonna have us do. And then I'm here to help you guys make sure that you get set up properly and be able to cross sell. That's what we're here to do, to try to help you guys to increase your and use all of your licenses. Increase your business and everything. Just a little bit about myself.
How
Yeah,
long
I'm
and just
laughing
to
at
kind
the
of add
hello.
to that,
how long you
I
been
have
in
worked with
insurance?
Dawnette for probably 5 years now.
Oh,
She is very well versed when it comes to assisting agents. She's really, really good at getting agents the answer. If she doesn't have the answer, she'll find it for you. She's really good with
Yep.
training and stuff like that. So if you guys have any questions, like I said, you're feel free to reach out to either one of us. She will help you. Okay, so what is life insurance? The basics of life insurance, guys, for a lot of people, a client will call in or they'll call you up and they'll say, "Hey, listen, I want to know what 250,000 costs. I want to know what 100,000, I want to know what 50,000." You got to get them from you'll have a lot of agents that will approach clients that way. They'll say, "Hey, let's get you that 250,000 we were talking about, blah blah blah." Life insurance is not a dollar amount. You want to get them out of that dollar amount mentality. You want to personalize what that money is being used for, because life insurance is for groceries, it's for utilities, it's for rent, okay? Clothes, diapers, income replacement if somebody passes away. It can be towards tuition or tax strategies if somebody has a tax debt from an estate. It is peace of mind. You're buying peace of mind that your loved ones are going to be taken care of once you've passed, what you passed on. The bones of it is life insurance is a financial contract between an insurance company that guarantees a designated sum of money is going to be paid, called a death benefit. It's going to be paid to the beneficiaries upon the policyholder death. So it is an agreement between an insurance company and the policyholder. So make sure you personalize it when you're talking to people. That's what this amount's going to pay for. That's what it's going to cover. List it out. Buying life insurance is a way of taking care of your family after we're gone. It's the last loving act you can do for them. That's a quote from Warren Buffett. Um, it is a life-changing thing. When we're selling life insurance, we are changing lives. It doesn't feel like it at the time. At the time, you're like, "Hey, I need to pay rent, so I'm trying to make a sale." But ultimately, at the end of the day, a year from now, 5 years from now, 10 years from now, when you get that call from somebody's beneficiary that says, "Hey, so and so passed away. You were listed as the agent. Can you help me process this death claim?" You're going to realize that when you help somebody do that and they get that check for 5, 10, 100,000, 250,000, the life changing event that just took place, how much it helps them out. So it is a life changing thing what we do when we're helping people. We're obviously here to make money. Everybody we want to make money. We want to take care of our families. But what we're doing is a noble thing, especially when it comes to life insurance. In my opinion, life insurance sales is the most noble sales of the insurance products that are out there. Absolutely. It changes lives. Basics of life insurance. All life insurance policies are designed to pay money to named beneficiaries. Okay. When the beneficiary dies, beneficiaries can be more than one individual. You can have a primary contingent. It can even be an organization. Some people like to leave money to charities, that sort of thing. In most cases, the policy is taken out by a spouse or anyone that can prove insurability. They have to have insurable interest. They have to have a vested interest in you remaining alive. Okay. You can't just take it out on Joe on the street and then hope Joe on the street push him out in front of the car. It's like, hey, you got to have an insurable interest. You want these people to be alive. So sometimes when you're talking to people, they're going to say, "Hey, can I list my friend or something like that?" It's like, well, they've got to have an insurable interest. They've got to have a reason why. And some insurance companies, just list them as a friend. That's not going to work. They need to have a blood relation, or they need to be, maybe you need to be dating them, that sort of thing, girlfriend, boyfriend, that sort of thing. They got to have insurable interest. They have a vested interest in you staying alive. Okay, so some key terms: beneficiary, designated person or entity. So it can be an individual or an entity, an organization, like a charity. Premiums, regular payments that are made to the insurance company to keep the policy alive. And then underwriting. Underwriting sometimes requires medical review, lifestyle changes. If they drive race cars, I mean, that's going to come up in underwriting. Sometimes family history, depending on the face amount, the dollar amount, they're going to want to know, "Hey, did your father or mother have any history of cancer, stroke, heart attack, that sort of thing. They're going to want to know those things. Sometimes underwriting includes blood tests, urine samples, blood pressure checks, possibly an EKG. They'll say, "Hey, we've got to go in and get an EKG done." Those that are in good health often qualify for better rates compared to the simplified or guaranteed issue policies or products that are available. They can sometimes take weeks for underwriting if they got to do medical exams or underwriting reviews. Typically offer the most coverage at the lowest cost to qualified applicants. So the more underwriting that they do for a company, the higher the face amount they are going to be able to give somebody. The less underwriting that they do, okay, if they do less underwriting, that means that they're going to have a reduced face amount. They can only get so much, and they're going to have some parameters you got to work around. Like maybe you don't get full benefits for the first 2 years. Maybe they're return a premium or a graded benefit for the first 2 years before you get full benefits. So always keep that in mind. If somebody complains about the underwriting process, you can tell them, hey, listen, we go through this underwriting process because we're trying to get you the best rate with the most benefit available. If you don't like the underwriting process, we can sidestep it, we can move around it, but it's going to reduce. It's going to cause us to have less that we can get, or it's going to cost more money. So that just keep that in mind. Okay, so what the first type of underwriting is called fully underwritten, and that is full blown. If you're looking for a straight life insurance, the higher dollar amounts, 100,000, 250,000. Most of the time, they have fully underwritten applications. Medical exams are required. Approvals based on health questions, and sometimes a blood or saliva test could require fluid samples or an EKG. So they could say, hey, you need to go in and get an EKG and have the results sent to the underwriting department. Uh, Health underwriting is involved. The insurer is going to review their medical history, medical records, prescription records. The approval process takes time, typically within 30 days, but it can be up to 6 months or longer. It can take, I've had fully underwritten applications take well over 6 months. The insurance company was just, you write somebody $1 million policy or above, they're going to sit and wait and figure out whether or not they want to issue this plan. Premiums are subject to rate increases. I wrote a policy on a gentleman that liked to race cars. I listed it on the application. Him and his dad, they re-souped up cars and stuff, and on the weekends they would race them. His policy came back. They issued the policy, but it had 150% rate increase. It's like, yeah, we're going to charge you more for this life insurance because you're engaging in a high risk activity on the weekends that often results in injury or death. So yeah, they're gonna charge you more for that. Coverage amounts for fully underwritten is often the highest coverage amounts available. So if somebody says, hey, I want a whole lot of life insurance, you can say, okay, I can get you a whole lot of life insurance, but I'm also going to get you a whole lot of underwriting too. They're going to look at it. Anything over $1 million coverage requires prior approval. Now, back in the 90s and stuff, when I wrote a lot of life insurance, writing $1 million policy was pretty impressive. Everybody was like, oh, you wrote $1 million. That's pretty amazing. Nowadays, $1 million is pretty routine. You'll see a lot of people that'll write well over, $1 million, $2 million, $3 million policies, and they don't blink an eye at it. That being said, insurance companies still are going to require approval for anything over $1 million. The nice thing about these policies, when they're fully underwritten, if the policy actually issues, it is immediate full coverage, which means that if the policy issued today, somebody died tomorrow, okay, as long as everything checked out, they didn't die from nefarious circumstances, it would be fully paid out death benefit. They starts immediately, so that is fully underwritten. Simplified issue is the world we live in regards to final expense. This is the one that we're going to deal with more often on a routine basis. Simplified issue is kind of the middle of the road of the underwriting, with fully underwritten being fully done, simplified being hey, there's no medical exams. They're not going to do any saliva tests or blood tests. But we're going to ask you some health questions on the application, and we're going to look at your medical records. These simplified issue policies are typically faster. Okay. These are normally, the approval process is typically made within 7 to 10 days. Now, we do have some carriers that, frankly, that we've had hiccups with the simplified issue of late, but typically the simplified issue is fast. When you're talking to a client and you're submitting the application and you're waiting for that approval process, if it doesn't show up immediately, because sometimes it'll immediately pop right up with everything being automated right now, it'll pop right up and it'll say, hey, immediate approval, policy issued as stated, blah, blah, blah. Other times it's going to say, hey, this is going to be sent to, underwriting. They're going to have to review this. And typically, like I said, it's still faster than fully underwritten. If it goes longer than that, something's kind of wrong. And 9 times out of 10, either they've got something on their health record that is going to, generate a denial, or it's going to generate a change of coverage, or maybe the company that you submitted with is kind of backed up and you might want to resubmit it with a different company or something like that. But ultimately, simplified issue should be fast in terms of their decision making. That's the whole point. That's the whole point of simplified issue. Now, simplified issue products have lower premiums in comparison to guaranteed issue products. Once again, we're going to talk about guaranteed issue products next. But with simplified issue, there's still some underwriting involved, so that is less expensive. It's more expensive than fully underwritten, but less expensive than guaranteed issue. Like I said, this is a middle of the road underwriting. Coverage amounts typically range from 2,000 to 50,000. Well, you get somebody who says, well, I want more than 50,000. Well, I got one or two options. If we want to stay in the simplified issue world, I can write you two separate simplified issue products with two separate carriers, or I can go to a fully underwritten application to get you more than 50,000. But if you want anything more than that, you want to stay simplified issue, that's kind of where we're stuck at. We're stuck at that band now. If it gets issued, this coverage is also immediate coverage. If approved, the coverage starts immediately. There is no waiting period. So that is the nice thing about simplified issue. All right. Guaranteed issue. This is the last of the underwriting programs that are out there. Guaranteed issue is just like it says, it's guaranteed issue. It does not matter what condition they have, what medications they're taking. They are going to be issued a policy. There's no health questions, there's no medical exams. Anyone that is within the eligible age range is going to be approved for this product. So, what does that mean? That means the insurance company is not going to do any research. They're not going to find out what they've got, and they are going to charge premium for it. This is the highest premium product of life insurance that's going to be sold. They're going to charge you for it. Since there's no underwriting, the premiums are going to be higher than fully underwritten or simplified issue products. And as a result, so not only is the client going to be charged more, every agent's going to get a pay cut. We're not going to get paid our full commission on a guaranteed issue product. It's going to be a reduced commission amount because, once again, the insurance company knows that the customers, the clients that we're getting set up on the guaranteed issue, these people have health problems. They've got something that, if they died tomorrow, there's going to be a death claim. So they're not going to pay top dollar for it, and they're going to charge more on the premium. And oftentimes it's going to come with a reduced death benefit. It's going to be a graded death benefit or a reduced death benefit, which means that for the first 2 to 3 policy years, it's going to have a less face amount than after that. So let's say you wrote a $10,000 policy and it was a graded plan. What that would mean is if you died from an accident during the first 2 to 3 policy years, the full death benefit would be paid out. If you died from a natural cause within the first 2 to 3 years, it would have a reduced death benefit of, let's say, policy year 1, it only pays out 2,000. Policy year 2, it only pays out 8,000. Anything after policy year 3, it would pay out the full death benefit of 10,000, as an example. If it's a return of premium, what that means is for the first 2 years, if they die within the first 2 years of natural causes, it's going to return the premiums paid plus 10%. If it's a natural cause death, if they die from natural causes in the first 2 years, they're going to get all the premiums they paid into it back plus 10%. If they die after 2 years from natural causes, then the full death benefit will be paid out. Guaranteed approval accepted by all applicants, regardless of health conditions. Doesn't matter if they were diagnosed with cancer yesterday, currently undergoing chemo treatment, currently had a heart transplant, does not matter. It's a guaranteed issue. The coverage amounts are also lower. Typically, they cap out between 25,000, sometimes 20,000 on the guaranteed issue products. Immediate coverage for accidental death, while natural death may have a waiting period. Accidental death is covered immediately. Natural death has a waiting period of 1 to 2 years, typically on a graded plan or return of premium plan. Any questions on fully underwritten, simplified underwriting, and guaranteed issue underwriting for life insurance?
A quick question.
Yep.
How many of y'all already have experience doing this type of stuff?
I
Did you
asked that
ask
at the
that at the
beginning.
beginning?
Daniel, just Daniel.
Oh, okay, just Daniel. Okay. I know Chrissy just dropped in here too. So, hey, Chrissy. Just wanted to make sure.
Hi, Chrissy. Yeah, so we're going to start. So when you're talking to somebody over the phone or in person, you're going to start with simplified issue. You're going to start there. You're going to be like, okay, hey, I've got these health questions I want to ask you. I want to talk about. Hi, Chrissy. Sorry, hello. While you're asking them the health questions, if they start telling you stuff like, yeah, I just got a stent put in my heart about a week ago, or
Right.
yeah, I'm on this medication, for this and that, if they start, if you're asking them the health questions and you start throwing up these things where it's like, okay, you're not going to qualify for a simple issue product, you're going to transition to the guaranteed issue. You're going to be like, okay, well, let's talk about guaranteed issue because this is what we're going to get qualified for. Sometimes you're going to ask a health question and you're not going to be quite sure. You're going to be like, I don't know if they qualify for simplified issue or not. And Donette's going to show you, we've got different channels on Slack where you can put in health questions. We got Best Plan Pro. You can list their health questions. It's going to point you in the right direction in terms of the carrier and product that is going to be best suited for that client. But sometimes you're just going to have to do the submission, let it go to underwriting, let them look at the medical records and come up with a decision. Sometimes it's going to be on the borderline where you're not quite sure. You're just going to have to turn it over to them and let them do their jobs. But ultimately, the world that we live in is simplified issue, and guaranteed issue is our backup. All right. Guaranteed issue is better than nothing. For people that fall into the guaranteed issue category and they say, hey, I want immediate death benefit, blah, blah. It's like, listen, you can tell me no. You can say you don't want it, but it ain't going to get any better with anybody else because this is where you are. You're in the guaranteed issue world. Okay. Death benefit, the money is paid out to people to our loved ones when we die. When submitting a life claim, they usually choose how they want to receive the money. They can get it in a lump sum. Typically, final expense policies are paid out in a lump sum. On larger life insurance policies, they can do different things with it. They can do a specific income provision. They can do lifetime income option or just an interest income, however they want to do it. For people that are also annuities licensed or trained, oftentimes if you sell somebody a life insurance, a beneficiary calls and say, hey, I need to help process a death claim. You can also take the money that they receive from the life insurance, drop it into an annuity, turn it into guaranteed income, and not skip a beat. The claims process when it comes to life insurance is also vastly different depending on the type of product that you're writing. A lot of people don't realize this part when it comes to life insurance. You'll talk to a lot of people over the phone. They'll be like, oh, I've already got taken care of. I got a life insurance policy. And you're like, great. What is that? Well, it's $250,000 with New York Life. Like, yeah, that's great. That money is not going to be used for your final expenses. That money is not going to be used to bury you. Okay. That money is going to go through a claims process, and the insurance company is going to require a death certificate. They're going to possibly require a certified copy from a funeral director, note or certifying your death. They're going to cross all the T's, dot all the I's. On a good day, it's going to take 30 days after the claim has been submitted to the insurance carrier to process that death claim. If you have a death claim that is within the first 2 years of incontestability, every life insurance policy has an incontestability period of 2 years. If it's within that 2 years, they're going to review that application. If somebody put down that they were non-tobacco and went to the doctor and they had a blood test and they had nicotine in the blood, and it's within that first 2 years, that insurance company has the ability to contest that and say, hey, they lied on the application. That rate should have been higher than what they were paying, and they can take it out of the death proceeds. If the death occurred or took place and there were any nefarious circumstances, okay, that is another thing that's going to slow that claims process down. It's going to take longer. They're going to definitely review that. There's going to be an investigation before the insurance company is going to pay that out. So the claims process on life insurance takes time. The minimum is around 30 days. If it happens faster than that, my hat's off to you, but you need to let people know if they've got life insurance, standard life insurance, you're looking about an average 30-day. Final expense is different, and we're going to get into that here in a bit. Okay. Any questions about the claims process, underwriting, anything like that? Clear as mud. Okay, let's go into some life insurance basics here. And these are going to be important when you're talking to people, because people are going to talk to you and they're going to say, hey, listen, I've got this covered. I got this. They don't know what they have. They haven't the slightest clue. They talked to some agent. The agent said, this is what you need. And they sold the policy and they haven't talked to them again. I know that because I haven't talked to any of the people that I've set up back in 96, 97 in a long time. So there's two basic types of life insurance. Okay. The first one's called term or temporary. Second one's called perm or permanent. Term policies include annual renewable term. I don't even think they really sell those anymore. They used to sell them back in the day. I don't know if they sell them now. And level term policies. Term policies are purchased for a specific period of time known as the term. Perm policies include universal life products, variable life products, fixed indexed life products, and whole life products. Permanent policies are purchased for as long as the policy holder needs it. All of those perm products that I listed are designed to last the remainder of your life, your entire life. They don't all do that, and I'm going to talk about that here in a bit, but they're designed to do that. The world we live in when it comes to final expense is the whole life product when it comes to permanent. All the final expense products we sell are whole life products. I'm just going to run through these real quick just to give you an idea. So annual renewable term, the basic concept of term, this is true life insurance. This is the truest life insurance. The premiums go up every single year. The cost of your insurance increases as you get older because you're getting closer to the death event that's going to happen. And as a result, that's going to cost the insurance company more money, and they offset that cost to you. Your premiums go up every single year. Does not build cash value. 100% of the cost of the insurance is on the client. Can possibly be available for conversion to a permanent plan. If you ever come across one of these, somebody's paying an annual renewable term and they're saying, hey, it's getting too expensive. One of the provisions you're going to look at in their policy is whether or not he has conversion privileges, in which case you're going to find out what age they cap out and what is available in terms of the permanent plans that they can switch to. So that is annual renewable term. Leveled term products are term products that the premiums stay the same for a certain period of time, such as 5, 10, 15, 20. I've even seen 30-year products now, which is good. They do not build cash value. They do, some are available for conversion, some are not. You have to look. And at the end of the term, 99.9% of every level term product that you see doesn't just end, it converts into annual renewable term, which means at the end of 5 years, it turns into annual renewable term and the premiums go up every single year. So it stayed level for 5 years, premium stayed the same, didn't go up for 5 years. At the end of 5 years, converts to annual renewable term, goes up every single year. Sometimes it'll go, I've seen some level term products where it'll run level for 5 years. There'll be a rate increase. It'll go level for another 5 years. There'll be a rate increase, go level again. Same thing with term with the 10-year, 15, 20. 9 times out of 10, those turn into annual renewable term. Okay. So the question when it comes to level term products, if somebody has one, is what are your conversion privileges? What at the end of your term, do you have the ability to convert it into a permanent plan? If so, what permanent plans does that carrier, that company you're with, offer that you can convert to? And oftentimes those conversion privileges means that it's regardless of health. So even if they've developed some sort of health condition, while they had the plan, they still are allowed to convert it to a permanent plan at the health rating that they had when they opened the level term product. So that is an advantage of having those conversion privileges. Any questions on term products? Nope, pretty easy. Most people buy level term products for like mortgage protection, income replacement, college funding, that sort of thing. Universal life products is considered a permanent plan. Back in the early 90s, universal life products became very, very popular because they had all sorts of benefits that the client could take advantage of. Prior to universal, it was simply whole life. Whole life was very rigid. It was X amount of dollars, build cash value, earned X amount of interest rate. That was it. But you couldn't do anything to it in terms of change your premiums or add more cash value or take cash withdrawals and not close the account, that sort of thing. So the universal life product came in. It fit the bill for a lot of people. It was really exciting. It had the ability to last an entire lifetime. It built cash value, had an adjustable premium. You could go in and say, hey, listen, this month the things are kind of tight. Can I reduce my premium from $100 a month down to 85? And they'd be like, yeah, sure, no problem. And then next month you could call them up and boost it back up to 100. Or if you said, hey, I want to put more money in this, can I throw more money? They'd say, yeah, no problem. The interest rates were based on current market rates or policy minimum interest rates, whichever was greater. So it had two different scales in terms of how the money accumulated in the account. It had a base minimum, and then it had how the illustration was ran at. For premiums to stay the same, they had to be funded properly, and that is the key to these universal life products. They allowed for cash withdrawals. You could do loans, had a lot of living benefits to them, but having them funded properly was a big deal. So in the early 90s, I sold a ton of, I shouldn't say early 90s, late 90s. I sold a ton of universal life products. And at the time, the interest rates were 12, 13%. So when I ran illustrations, I ran them at 6%, 7%, thinking that I was doing the clients a favor and I was giving them gospel in terms of what their premium was going to be on their policy. What happened in the early 2000s, 2001, 2002, everybody's aware we had the giant market crash. Interest rates fell out of the bottom. They went to zero. So my illustrations that I run at 6 and 7% were not even close to being accurate. And as a result, a lot of the universal life products that I sold to clients that I said your premium is going to last the rest of your life and never go up. They got letters from the insurance company that said, hey, you don't have enough money in this account to keep your life insurance in force. You need to increase your monthly premium payment to X amount of dollars. So there's more money going to this life insurance policy to account for your age going up because we don't have any, we don't have any money it's not accumulating any cash. It's still at zero. And so I got a lot of phone calls from a lot of people that were very upset. They said, "Hey, you sold me this plan. It was supposed to be a permanent plan. It was supposed to last the rest of my life. It didn't. Now they're saying they want more money, and I want to drop this." And as a result, they were older, maybe not as in good health, and so that created a massive, massive problem for a lot of agents. And we had to go back and rewrite a lot of plans when it came to the universal life. So funding universal life products is one of the reasons why universal life products are not as popular now. They're just not. They've got to be funded properly, and if they're not funded properly, then your client can find themselves in a situation where they're getting that letter from the insurance company saying, "Hey, you need to pay more money into this plan." Okay, great concept though, great concept. It just didn't not too good on the application. When I got my securities license, I was really excited because it was going to allow me to sell the variable life insurance product, which, this product is very similar to the universal life product. The biggest difference being that it builds cash value with an interest rate that's credited based on market investment allocation. So now we can actually go into our life insurance policy and we can actually select different asset allocations, based on actual market products. And this was a really cool concept. And the moment I got my securities license, it does require a securities license to get that. So the moment I got that, I immediately went out and started marketing it. And I found some clients, it's a very niche market type clients. They got to be somewhat investment savvy to really have an interest in this type of product. But you can earn a higher interest rate, higher rate of return. You can actually build more cash value in these variable life insurance products. And these are still sold today. There is a lot of advantages to this. The biggest downside to the variable life insurance product has to do with it's subject to market investment allocation. So the best thing about it is also the worst thing about it too, because obviously life insurance has a mortality and expense an age component that is constantly robbing of its cash values every year that you get older. And then you add on that the variable life insurance product of having these investment allocations that are subject to market loss. If you have a market loss, market drop, and you're getting older, it's kind of a double whammy when it comes to cash accumulation potential on these products. And as a result, um, you can find yourself in a very fast situation with an insurance company, them sending your client a letter saying, "Hey, you need to put more money than this," because not only is there not enough money in it to, cover the cost of your insurance as you get older, but it was subject to a market loss, and the market did a drop, and now your life insurance is in danger and is suffering. So you're going to have to put more money in it. And as a result, I kind of steered away from the variable. Like I said, I only sold maybe one or two of these, not many at all. But getting that double whammy hit on the cash accumulation on the variable product is enough to make you go, maybe this isn't such a great product after all. And so, like I said, I don't didn't sell a lot of these, but you will come across some of them. They still have them there. Fixed index life insurance. This by far, in my opinion, is the best of both worlds when it comes to the universal life and the variable life products. The fixed index life insurance, okay, is is the cat's meow. It gives you the best of both worlds. It still has all the flexibility of the universal life product. It still allows you to earn the higher rate of return, like the variable. You're going to earn the higher rate of return, but you're not subject to market loss. And that's the beauty of the fixed index life product. They build cash value. They follow the market index, such as an S&P 500, Russell 2000, that sort of thing, via participation or spreads, but funds are not directly in the market. And that is the key. So if the market goes up, you're going to earn the market increase. You're going to get the increase in terms of the account value. But if the market drops, okay, takes a nosedive, you're not subject to any loss, which means your account never goes below You're never going to lose money out of your account. You're only going to take advantage of the market increases. So that is a beauty of the fixed index product. Interest is credited using points or spreads. We can go into that if you guys ever get yourself in a situation where you need to talk about these to somebody. I can go over those with you. The rates of return are higher, typically higher. They've got a lot of tax advantages. They work similar to a Roth IRA in that you can have that, you can put that money into it, you can have it uh, accumulate, and then you're not subject to tax upon withdrawal. So that makes it nice. You can get cash withdrawals, loans against it, living benefits, that sort of thing. So for people that want to get life insurance, but they're also looking for another bucket to put money into that's going to have a higher rate of return. The fixed index life insurance is a great product. Transamerica has an FIUL product that is absolutely phenomenal, and that would be a good one to put them into. Last but not least, the whole life product. The whole life product, this is the world we live in when it comes to final expense. They are all whole life insurance products. They're guaranteed to last an entire lifetime. They build cash value. It's a very straightforward type of thing. It has a death benefit. The interest is based on long-term bonds, so you're not going to be making a lot of money on these things. I mean, basically, 2 maybe 3% return in terms of your cash accumulation. Um, uh, the growth is predictable. It grows at a predetermined rate, predictable growth. So when you show an illustration on a whole life plan and you say in policy year 10, it's going to have $2,393.33. Policy year 10 rolls around, it's going to have 2,933. I mean, it's going to be down to the penny. I mean, you can actually predict it. There's no fluctuation there. They does allow for some limited cash withdrawals. You can take loans to it. They do have some living benefits. These whole life plans are not like your grandfather's whole life plans. They have adapted and grown a little bit. You've got a little bit more benefits now than a lot of the older whole life products. So you don't have to close the policy in order to do cash withdrawal. You can do a cash withdrawal and still keep the policy open. So this is the world we live in here when it comes to final expense is the whole life insurance. Any questions on the permanent life insurance products out there? Anytime you're talking to somebody, they say, I have a permanent plan, it's going to fall into one of those four categories. It's going to be universal life, it's going to be a variable life, a fixed index life, or it's going to be a whole life. It's going to be one of those four. Any questions on those? No, clear as mud. Remember at the beginning of this, I said you're going to be kind of eating an elephant. We're talking about a lot of stuff here. You're not expected to know all of it, and you're not expected to retain all of it. Like I said, I just want to introduce you to it. So when you come across it, and I say, hey, remember in training when we talked about this, that's what they're talking about. Somebody has this. What do they got? Now you're going to have an idea, a little bit better idea of what exactly they have and what we're talking about there. Okay, so how do you determine what life insurance product is appropriate? Now, like I said, for what we're doing, it's going to be really straightforward. We're going to be working with one type of demographic, one type of product. That doesn't mean that you're not going to sell these other products or you're not going to come across people that are going to need other types of products. So I want you, when you're talking to people, to kind of have in your mind an idea, a client profile. You need to start building a client profile when you're talking to them and breaking it down in terms of where they're at and how that works. So the question you need to ask yourself is, where are they at in their life cycle? We have a life cycle, the life cycle of an ant. Builders, accumulators, or spin down. Where do they fall? Builders are typically between the ages of 18 and 30. They're still in college. They're not established in their career, typically in good health. They're physically fit. They may or may not have kids. Sometimes they're dating, possibly engaged. They don't have a lot of debt, typically not a lot of debt under 20,000. They have a limited income. Maybe they're working part-time, still going to school, living with their parents, renting, first cars, first jobs, first apartments. They're impulsive risk takers. The skydivers are this age group category. The weekend race car drivers are this age category. Okay. Um, these are the impulsive risk takers. So, talking to a builder, how do you talk to a builder about why they should buy life insurance? They're not going to die. That's not what these people are thinking about. They're not thinking about death. They're not thinking about final expense. They're not thinking about, a mortgage covering their mortgage. They're thinking about, what club they're going to go to this next weekend. That's what's going on in their brain. Okay. We all lived through this and we had the best time and we didn't even know it. This was the best time. We didn't think about death. We didn't have any of that on our mind. And yet these are the people that are in the best health. They're physically fit. They can qualify like that. They don't have to
Mm-hmm.
worry about it. And yet they're not interested. How do you sell to a builder in this category? Okay. So for these people, if you're talking to them about life insurance, you're going to talk to them about, you know, buying as much life insurance they possibly can, because even though they don't need it necessarily now, if they're going to get married, they're going to have a home, they're going to have a mortgage, they can lock in a rate now that's going to save them money for when they need it later. So if they have the ability to take care of it now, now's a good time to get it. You can get it low and cheap and expensive, and you can get it locked in. For people, kids in this age that are financially savvy, they're going to listen to you. They're going to, yeah, that's a good idea. You can sell them a
Mm-hmm.
final expense policy. Once again, you can say, hey, listen, these have a cash accumulation component. You want to save some money for college, that sort of thing. You want to save money for a down payment on a house or a car. You can have this set up, have this in place, but for take care of your future expenses, your final expenses. But while you're alive, these have living benefits that you can put money into, and it's a cash accumulation thing where you can use it while you're still alive. So they do have some advantages. You're going to talk to people that are older, that are grandparents, and you're going to say, hey, I just helped you out with your final expenses. Do you know of anybody? Do you have a grandson or granddaughter that you would like to put money towards their college for? You can open them up a final expense policy. It's got a cash accumulation component. They can use it for college. So builders are going to be using final expense and life insurance for different reasons than accumulators or spin down, but they still have a need. The need is still there. So you just have to approach it differently. The sales pitch you use has to be different when you're talking to a builder. You're going to focus on long-term goals and
Mm-hmm.
living benefits, immediate benefits, how that benefits them now. Accumulators is typically where we all typically land. This is where we kind of are between the ages of 30 and 60. We're typically established in our career, paying on student loans. We've got maybe a mortgage, IRAs, 401ks, college funds. This is the group of people that you're going to talk to that they're going to say, I don't need it. I already got it covered. When I die, they're going to have all the money they're going to need. I've got a 401k. I've got a pension. I've got a $250,000 life insurance policy, blah, blah, blah. They haven't the slightest clue what their family needs. They think they do, but they don't. IRAs, 401ks cannot be accessed simply because they're listed as a beneficiary. I mean, it takes 30 to 45 days to access that money. Those financial holding companies are not simply going to release it because somebody called up and said, "Oh, yep, they passed away." They're going to, great, we need proof of that. You're not going to have access
Mm-hmm.
to this account. It's going to take time. Mortgages, houses, once again, they got to get it transferred into their name. They got to get it sold if they're going to get money for it. It's questionable whether or not it's subject to probate. I mean, there's all sorts of stuff that comes in there that delays it. So when you're talking to an accumulator who has it figured out, 9 times out of 10, they don't realize that the assets that they've accumulated during all these years don't just transfer over immediately to their beneficiaries. There are some hoops and stuff that take place. Now, these people typically have some minor health issues. They've gained a few extra pounds. They weigh a little bit more. They're not as, risk. They're more risk averse now. They're not doing the racing on the weekends because, they're back. I mean, sitting in that car, all that time, that sucks. They may take, some medication on a routine basis, lisinopril, got a little high blood pressure, that sort of thing. They're going to be married, possibly divorced, separate. They're going to have kids, or maybe somebody they're dating has kids. They're going to have some debt. Typically between the average debt is around 50 to 70,000 for these people. They've got responsibilities, dependents. They're also in their maximum earning years. These people are making the most money they're going to make in their entire life during this time, on average. So these are the people that can afford it and don't necessarily think they need it. So when you're talking to these people, you need to say, hey, listen, especially when it comes to final expense. So I had somebody ask me, say, how do you sell final expense to accumulator? They've already got 250,000, or they're looking for mortgage protection, blah, blah, blah. And say, well, it's really easy. You take a mortgage protection lead. How do you sell final expense? Say, well, instead of covering the entire mortgage, instead of taking a life insurance policy out for 300,000 to cover the entire mortgage, why don't you simply cover a transition period? So instead of $300,000 term life insurance policy, why don't you take a $20,000 to $25,000 final expense policy that covers the mortgage payment for a year or 2 years? So when your husband passes away, it gives you a 1 or 2 year transition period, so you can figure out whether you want to stay in the house or if you want to sell it, or maybe if you want to get a roommate. It's going to be less expensive for you. And oh, by the way, I can lock in that rate for the rest of your life. So even if you move and you go into a different home, that's maybe 400,000 or maybe less, it's only 200,000. You don't have to get a separate mortgage protection policy. This one's going to go with you. How's that sound? That's how you sell mortgage protection on that. Uh, Somebody's logging out,
Okay.
logging back in.
Yeah.
All right.
Oh, Marcus.
Okay. So that's accumulators. And then spin down. Now, 9 times out of 10, the people that we're talking about in terms of our spend, in terms of our clientele
Allow.
that we work with on Medicare, are going to be in this phase of their life. It's spin down. They're typically between the ages of 60 to 100. They're nearing retirement or retired. Some of these people are still working, by the way. They have part-time jobs. Um, they are either starting to collect Social Security or currently collecting Social Security, which means they're on a fixed income. They have X amount of dollars coming in. That's it. You're looking to sell them a life insurance policy product that is going to take from that. So you really got to justify it. They a lot of times have estate planning needs, wills, trust, inheritance tax that they're concerned about. They are the people that have chronic health conditions. These are the health conditions that they've had for years. They've been treated for it. They've got long-term care concerns. Long-term care is a big concern. They either have a spouse in need of care or that's possibly deceased. They're on fixed income. They've got some debt, not a lot. They've learned their lesson. They don't carry a lot of debt. Um, and they are absolutely thinking about burial, cremation, who gets the family keepsake. So it is on these people's minds. So you can ask them point blank, burial or cremation. And actually in our our script, it is that direct. It's like, have you
Yeah.
chosen a burial or cremation? How do you want your remains to go? You're going to ask them those questions, and be that direct, and they're not going to skip a beat. They're going to tell you, yeah, I'm going to do a burial. Yeah, I'm going to do a cremation. 9 times out of 10, these people have thought about it. You're not going to get a blank stare. They have thought about it, and you can say, hey, have you talked to who's going to be the beneficiary, who's going to make the arrangements? They know in their mind who they want to do that. Any questions about builders, accumulators, or spin down? These categories. These categories, when you're talking to people, if in your brain you immediately start building a client profile in terms of what these people need in this stage of their life, it's going to make you a better agent. It's going to assist you in your sales. You're not going to be pitching people things that they have no interest in and does not resonate with them. You're going to be talking to them about products, and you're going to be talking to them about financial needs at the specific time that they need it and why, and you're going to know why they need it. It's going to resonate with them. It's going to make you more sales. It's going to make you a better agent. So builder clients needs include catastrophic major medical coverage. These people need it when they're builders. Doesn't mean they're going to have it. Most of the time, when they're builder stage, they don't. They're still on their parents' plan. They need ancillary products, accidental policies, disability, short-term disability. Term life insurance products are good for builders. Final expense products are good for builders. Convincing them to get a final expense product is a different ballgame. You have to approach it differently. Accumulator clients need preventative and comprehensive major medical coverage. Notice on builders, hey, we only need catastrophic stuff typically, you know, but accumulators, no, we're going to go to the doctor a little bit more often. They have term permanent plans needed, final expense life options, mortgage protection, disability coverage, ancillary products, dental, vision, hearing. Spin down clients have major medical or Medicare. Okay. Term perm, final expense options, obviously. Long-term care. What does long-term care mean to a spin down? Anybody know? It means long-term care policy, but it also
Mm-hmm.
means annuities. Annuities have income doublers that pay double in the event of long-term care. So annuity products also include long-term care benefits. Ancillary products, hospital indemnity plans, great for spin down clients. Got a Medicare customer, it's got an MAPD plan with a maximum out of pocket of $8,325 per day hospital stay. You can sell them a MAPD plan that's got a Part B reimbursement and sell them a hospital indemnity plan to cover the hospital stay. All right. Any questions on builders, accumulator, spin down? Anybody talk about it? Nope. Everybody good? Clear as mud?
I guess so. iPhone, is that you, Marcus?
That is me.
Okay, just
Marcus,
making
you made it
sure.
back. All right, buddy. Okay, so final expense. Now we're going to narrow it down to final expense. So this is what we're doing here. Okay, when it comes to Orca in the telemarketing division of Orca Republic, we deal in final expense. It's not that we don't have the ability to sell those other things. We do. We have the ability to sell those other things, but we have become experts in this specific niche. And we are asking you to do the same thing. We want you to become experts in this specific niche so that when you're talking to people, you can be like, hey, we're going to get this taken care of first. Once we got this taken care of first, we can talk about those other things. But right now, final expense is a big deal. This is where we want to get people set up. And there's reasons for that. This final expense leads to these other conversations. It leads to the fully underwritten life insurance conversation. It leads to the annuity product conversation. It leads to the Medicare conversation. Starts with the final expense. Things you must know about the final expense policies. They are whole life policies. They have a small death benefit and they are typically easiest to get approved for. They're easy to get approved for. They're also known as funeral insurance or burial insurance. Um, they have simplified and guaranteed issue underwriting. There is no such thing as a fully underwritten final expense policy. I've never heard of it. It always is either simplified issue or guaranteed issue. Once again, we're always going to start out at simplified issue because it's going to be the lowest cost for the client. It also pays the full commission. We're going to use guaranteed issue as a backup, meaning that they're not going to qualify for simplified issue or they got to decline on simplified issue. And we're calling them back and selling them a guaranteed issue product. They all relate to small whole life policies with face values or death benefits of low amounts, such as 2,000 up to 35,000. And the biggest kicker about these is beneficiaries can receive the death benefits in 7 to 10 days. That's what makes these products so powerful. That's what separates these products from all the other financial products that you hear about. Life insurance, fully underwritten life insurance policies, the $250,000 life insurance policy, the $1 million life insurance policy. Those are not going to cover final expenses of burial or cremation. When it comes to the burial or cremation, somebody's going to pay cash out of pocket, or they're going to have a final expense policy. It's the only way that's going to happen. Doesn't matter if they have a check. They say, "Oh, well, I have $50,000 in my checking account," or they have 50,000 in my savings account. Unless they're listed as a signer on that checking or savings account, they are not going to be able to access those funds. If they're listed as a beneficiary, there's going to be a 30 to 45-day wait. There's going to be a claim that has to be filled out and submitted, a death certificate that's going to be submitted in order to get access to those funds. Same with 401ks, IRAs, those type of things all require death claims that take 40 to 45 days. Final expense products, they are designed to cover the exact thing that they are talking about, the final expenses, burial or cremation. And as a result, they know that people need those funds fast, and the payout is within 7 to 10 days. So when your beneficiary is sitting there talking to the funeral director, and the funeral director, after having made all the arrangements, says, "And how are we going to be paying for this?" And you say, "I've got a final expense policy that I've submitted the claim on, and I'm expecting a payment within the next week." The funeral director will nod their head and go, "Okay, no problem. We can wait a week." They'll wait a week. They'll wait 7 to 10 days. They will not wait 30. Okay. They can't wait 30. They're not going to put the body on ice for 30 days until they get paid. They need paid. A lot of these times when you submit a death claim on a final expense product, it pays out in 7 to 10 days. A lot of times it doesn't even require a death certificate. On some of the lower dollar amounts, they will simply issue that, they'll issue the death benefit. They'll simply pay it out. So that is an advantage. Like I said, the claims process is much, much simplified when it comes to final expense products. So when you're talking to clients and they say, "Oh, I've already got it taken care of. I've got a whole life policy. I've got a term life policy. I got blah, blah, blah. I got a universal life policy. I got 150,000. You can confidently tell them, "No, I'm talking about your final expenses. That policy is not going to cover your final expenses. The final expense products are going to cover that." If they say, "Oh, I've got VA benefits. I was in the military." Friend, I thank you for your service, but that is a reimbursement, and it's going to take, could be up to 6 months before your loved one gets that money. And then it's only going to be up to, I think it is 2,000 is the max benefit when it comes to that. $1,000 is going to be used for the plot. $1,000 can be used for the casket. It's a max benefit of about 2,000, and it is a reimbursement. It is not going to cover those final expenses for you.
Right.
All right. There's only 4 ways to take care of final expenses, and you can confidently speak about this. Do nothing. You can just let your kids pay for it. Whoever's going to do the final expenses, it can come out of their pocket. That's the
Mhm.
first way. Second way is you can try to use your savings, but most people can't save, they can't rub two nickels together to save if their life depended on it. And once again, your loved ones do not have access to your funds just because it's sitting in savings. Third, you can do a prepaid funeral plan. Biggest problem with that is you're going to pay more for those. They cost more, they're more expensive. And number two, if anything changes, if that, funeral home company changes hands, a lot of times they don't honor those existing contracts. So that's not always the best way to do it either. The fourth option, the best option, is to get a state regulated final expense plan, which is why we're having this conversation. Final expense plan is the best way to go. Now, the products that we utilize, these are our core products. It doesn't mean we don't have other carriers, right? This is our core products. Liberty Bankers, American Amicable, American Home Life, AIG or Corebridge, and Guaranteed Trust Life. Okay. And I'm going to let Dawnette do her thing and give us all a breakdown in terms of those carriers. And if you could talk about our CRM and Best Plan Pro.
Yeah, sure.
Don't mean to
Let
throw
me
that in on. Do you need me to stop sharing?
no. Well, yeah, for the people, I guess.
All right.
But really, no, I don't. I just thought about it. They might can't follow
I'll
along
let you
with
share.
that. Uh, let's see. Sharing. Let me know when you guys can see it.
I can see it. Can everybody else see
Okay,
that
so we
okay?
okay,
Yes.
Yep.
great, great. Cool beans. All right, so this would be the CRM that he was talking about. You can see like I got people here that I can call and dial. Um, so you would have, if you have access to the CRM, you have your people here. This is where you'll start to be making calls and things like that. You can call them here just like that, right? Um, Best Plan Pro, he talked a little bit about that. This is where you can put in like their date of birth, height, weight, gender, if they ever use nicotine, tobacco, where you would be able to put in their state here, face amounts. So you can get your face amounts and put them here, right? Also the nifty thing about this one, you can quote with underwriting. So let's say if they had like high blood pressure, if it's a controlled high blood pressure, they're still taking medications for it. Let's say they got 5 years ago diagnosed. You're able to add that, and let's add a medicine. One of the common ones is Cinepril. Okay, so you can add medications and conditions here. All right, and then you are able to run the quote. When you run the quote, it will pull up the carriers that you select. Because Jacob and I take you through once you get your Best Plan Pro set up to select your carriers. It will give you your carriers. As you can see here, you can look at it for 30,000, 15, and 10, because those are the face amounts that I chose for this particular client. You're able to see which carriers give you the rates and what they are. And you are able to go directly to the carrier. Let's say if that's what they chose, you're able to go directly to the carrier. Make sure you're able to log in and you can start your new application. So you'll be able to do that. That's one of the carriers with American Amicable that we have. The next carrier would be Liberty Bankers. You can log into there. It timed out only on that one. So let me go back here. Let's see. All right, you can log into with Liberty Bankers and be able to access the e-app. So we want to make sure that we're able to log into the carriers. They do, some of them do time out. I did have some up early on. Also, they don't show this one on this particular one, but GTL is one of ours too. When you log in here, it comes like this, where you're able to go in and quote um, for your clients through GTL if that comes up. So you're able to access it through the e-app. The only one that you won't access through e-app will be Transamerica. You literally have to go to their page because they have so many different portals to access. You literally have to go to their page and select the FE Express, which is the final expense express, and click on get a quote. And you would start here with the gender, date of birth, and state and risk class, whether they have tobacco or not, right? To get that quote. So that's how you would start that one. So once you get all of your carriers, you want to be sure to log into each individual carrier. Once you get your Best Plan Pro, we can, set it up where you're able to log in to make sure that it transfers most of those over. So you could just click access eApp and it takes you right to the application to keep it going for you. Um, Another thing I want to show you guys, we got this little nifty tool here where you can look at funeral pricing in the area. Just going to give you an example. Let's say if we use Georgia, um, you can look at the crematories and mortuaries there. You also have at the bottom where you can look at direct cremation, full cremation, affordable burial, and traditional full service burial, and it gives you like an average. So you can have something to go by if you need to go by something. Um, Also, if you guys look in your Republic Financial Academy, for those of you who don't have access yet, we're going to get that access to you so you can go in here and look at these modules. But one I want you to kind of hone in on would be product training because it also gives you um, underwriting notes. They have PDFs here for like American Amicable, Liberty Bankers, American Home Life. Some have videos as well to give you a little bit about the companies as well, things that you can look at with them. This even shows you like an application, which is really cool because when you look at the application, go to it, you get familiar with those questions, right? Those questions that if they answer anything to, like he was mentioning, you can get rate of return, rate of premium, return of premium, I'm sorry, return of premium, or graded if they depend on how they answer, right? Or if they won't be qualified. So it gives you, something to go by that you're able to look at it in paper form to kind of give you some questions. Also, in the classroom, you have like your presentations, which you'll be using to do like the inbound, outbound calling scripts to call, he touched bases on that you'll be using when you are on the phone. Um, and it gives you a lot of little great things. So you want to look at all of those things. Underwriting, if you need to look at something with a client, you do have underwriting here where you can look at the matrix here, get to access it here. And also when he was telling you about getting access to the carrier help, this is the carrier help channel in Slack that we'll have you access to where people will ask questions about if they have like certain things going on with them that you can they'll give you like carriers. Some people ask questions about banking information, um, medical information, things like that, and they will give you um, which carrier would more likely get that approval for you. So you have that help there um, that they provide. Daniel is very good at that. So is Zach and Eric. They do answer really great on there. Any other questions? I think that's all I got to show them. Mine is pretty simple.
You get the fun stuff.
Yes.
My
What
stuff
you
is
say,
boring.
Chrissy?
Yeah, my question is like, is it just one access point and then it links to all of those different pages?
So yeah, Best Plan Pro is kind of like I don't know how many of you guys have Medicare experience, but if you ever have done Medicare and you did Sunfire, you know how you can go into Sunfire and you can see all the carriers and what
Yeah.
plans and all of that. This is
Mm-hmm.
kind of similar to that because it gives you all of your carriers right here in one area that you can pick which plan, for your client that you think is the best, right? Um, Here's American Amicable, here's Liberty Bankers. When you guys get Corbridge, there's Corbridge, Transamerica. So you'll have those carriers there and you'll be able to access the e-app for all of them except Transamerica. That's the only one you have to go actually to the website to do that
Okay.
one. That's the only one. But yeah, you'll be able to do that from here. Yep.
Okay. Thanks.
Yeah.
Yeah, Best
All
Plan
right.
Pro is by far the I love Best Plan Pro. I mean
Yes.
it's pretty cool.
They give you the top recommendations based upon what you put on this side. Like if they have high blood pressure, like if they, if they have any health things, you can add that there just by clicking this, toggling this button here and add what they tell you, right? If they don't have anything, you can get it then too. And it lets you know also, to his point, it lets you know if it's immediate or not. It'll tell you if it was return of premium. If it was graded, it'll have it right there in that little gray box to let you know.
Yeah.
So it's very nifty in that fact.
Mm. Yeah, that's a nice feature.
So you're saying
Hmm.
even with the like say if they choose American Emerald, you have to go out and then log into the correct portal
With
in order
American
to.
No, you're
Amicable,
just
it
going to
takes
click.
you right there. It takes you right to it. Once
Oh,
I
which
click
one?
on there, if I click the American Amicable Clear Choice and I click Access e-app, it takes
Mhm.
me directly to
Oh,
The
okay, so
the
you
carrier
have
mobile
website.
to
app.
log out and then
Mm-hmm.
log back in to their portal.
You just go log in from right there.
Oh, okay.
Yeah, you just
I thought
log
that was
in
the
from
one that
right
had
there.
multiple
Oh
portals.
no, that would be Transamerica. That's a different
Oh,
one.
okay.
Yeah.
So
Yeah,
like I
that's a
said,
different
so
carrier.
if they choose if that's the one that gets chosen, that's what you're saying. You have to go out and um manually log into their website. Is that correct?
Yeah, until the carrier website would be with Transamerica. That's the only carrier you will have that issue. All the
Okay.
other carriers, you can just click on Access e-app right here, and
Mhm.
you'll go straight to the carrier website.
Oh, okay. I thought it was.
You'll be,
People have
yeah.
been running into problems with American Home Life being able to. It's been thrown up an error message, by the way.
Okay.
If you
Okay.
do, if you
Let me
do
show
access
America
EF,
Home Life. I don't
yeah,
know if
if you
I
do
have it.
access
Let me
EF,
see if it's on there. Let me see if they even have it on.
yeah,
If it's one
it
of the
may not
ones
have
that
popped up.
they may not, because it
Is that the
does
one that
go
says
so many.
Core Bridge? Is that the one?
Transamerica is the one that does not show.
There's
This
American
one,
Home Life right there.
Transamerica. Let's
Yeah,
see if
click on the
mine
access.
go.
Yeah, yeah. See
It's
error.
still in the era.
Hmm.
So you have to go to that one. American Home Life and Transamerica. You go directly to the carrier site. See if I go to the carrier site, I get here and I'm
Yeah,
able to go in. So it's very imperative that when you get access to each carrier, you go to the website, you sign in. Very imperative to have that. And
yeah.
when you do get your credentials from Best Plan Pro, we kind of get you guys set up on that part with your credentialing, then we'll walk you through trying to see which ones you can access from the e-app to be able to sign in with what you signed in initially. So you want to make sure when you get it from the carrier, sign in initially, that you can get onto their website. Make sure you bookmark it. You see how I bookmark it? I can go right to it, bookmark it, right? And then go to your Best Plan Pro, put in your credentials. When it shows up, like you put somebody's information in and it shows up the thing, when you hit Access e-app, you want to make sure you can log and sign in there too. So that way, when you're on the phone with the client, you're not fumbling trying to figure out what to do and how to get there. It's already done. So you just hit the button, boom, you're there. Hit the button, boom, you're there, except for those two that we just reviewed, which is Transamerica and America Home Life. You just go straight to the carrier site. So that's why it's important to bookmark them, make sure you can get in them, and then you'll be all set. Thank you for that. Anything else, guys? Any other questions you have? Don't be shy. Come off of mute. Talk, talk, talk.
My only
Okay.
question is, and oh, I appreciate the training, Mr. Larson. It was incredible, because those general terms, a lot of people don't realize them. Although they've been in the insurance industry, there was just a lot of information that you shared that I didn't know. So thank
Well,
you.
I'm glad. I'm glad that because, like I said, I mean, I um sometimes, people are like, well, you're going to stuff they don't really need to hear. It's like, well, I think they do. I mean, I think that it's important that you at least get familiar with it. And because when you're in the field and you're talking to people, I mean, they're gonna throw you curveballs. So
Mhm.
at least having a basic understanding of how this things work, how this industry works, I think is important. So if everybody can see my screen, so the telephone sales process, frankly, it's the same. I mean, whether it's over the phone or in person,
Mhm.
regardless of how the call originates or how you're talking to somebody, whether it's an inbound call, outbound call, a referral, whether it's a friends or family. We do a lot of stuff over the phone. But I always tell people it's like, don't forget about your local community. Don't forget about the local area. I mean, you're going to have, people that you can do some strategic marketing and stuff with, in your area that will help you create sales too. So regardless of how the call originates, the very first thing you're going to do is kind of build rapport. And you're going to talk about core children, occupation, recreation, emotion. You're going to find a way to bond with that person. I'm going to tell you a little bit about me. I'm going to hear a little bit about you. Oh, you like horses. I do too. Oh, you have a dog. So do I, blah, blah, blah. I mean, you're going to build rapport at the beginning of the conversation. People have to like you in order to do business with you 9 times out of 10. That's a difficult thing for me because most people don't like me, but I'm just saying that's what you want to do if you're doing sales. And while you're doing this core, you're going to be fact finding. Sometimes when you're asking those questions and you're going through, hey, you got any grandkids? Got any children? And they say, yeah, I have a son or a daughter, and say, oh, how old are they? Are they married? And blah blah. It's like, oh, okay, well, now we know who our beneficiary is going to be. Now we know who's going to make funeral arrangements. Okay. Now we have a better understanding of why they need it and what their why is. What's their motivator? Why are they looking to get this type of coverage? You're going to have a better understanding of their situation. And it's a good time sometimes when you're having the conversation, especially when it comes to final expense, because it's a conversation that people typically don't want to have. Um, talking to somebody about mortgage protection, so much nicer because, mortgage protection, oh, yeah, it's life insurance, but it's dollars and cents. It's like, yeah, this X amount, what's the interest rate on your mortgage? Do you want me to design this in a way that pays the mortgage off early, not 10 years off your mortgage, blah, blah. I mean, all that stuff is, it's not really about death. I mean, it's life insurance, but it's not really about death. You talk to them about final expense, it's like, oh no, we're talking about a burial or cremation. How do you want your remains to be taken care of? Because that's the topic of conversation. So that's going to be a little bit harder for some people, and so it's a good time to check their temperature and say, hey, you still doing okay? I know this conversation isn't the greatest, but it's one that we want to get taken care of. When it comes to the presentation, once you found something, and you're going to see it, Dawnette showed you the academy. Okay. And I would encourage you guys to create your accounts in the Republic Academy. That academy is absolutely phenomenal in regards to the modules that it has there. I mean, it's got the module there for the products, so you can read up on the products. It's got a module there for the system, which goes over. It has the sales scripts for inbound, outbound calls, the dialing method when you're talking to people. It's got a overcoming objections module. You can click on that. It's got live call examples. You can actually listen to people uh, talking. It's got all sorts of resource field underwriting module where you can look up different things. All sorts of resources there. But when it comes to the presentation, and you'll see that in the system module, when it comes to the script, you pull up the scripts, you're reading the scripts, it'll talk about, okay, all right, I've got rates spinning up right now. While the rates are spinning up, I'm going to tell you a little bit about the product. And it goes into, you're educating them. You're saying it's a whole life policy, rates are guaranteed for life, blah, blah, blah. You're going to educate them on the process. This is what it takes to get things done. And then you're going to create a little bit of level of uncertainty here. Say, hey, listen, what I'm doing with you right now when I ask you those health questions is called field underwriting. Okay. I'm doing field underwriting. What I'm doing is I'm trying to find out what's the best product, what's going to be the best fit for you based on the information you're giving me. I don't have access to your medical records. I don't have access to your health exam, stuff like that. The underwriters that work in the carriers, they have access to those things. So I'm going to do the best I can to give you a rate that's as close as going to be possible. I'm going to also place you with a carrier that I think is going to accept you. However, it's ultimately up to the underwriters. They've got to make that decision with that specific carrier. So when I submit the application and I send it in, if it comes back that it's anything other than what I've said, then we're going to address it at that time. And I want to let you know that we'll have a place to go. I'm going to get you covered, but it may not be with this specific carrier depending on how it comes back. So you create that level of uncertainty that, hey, it's not up to me to approve the plan. I don't get that luxury. It's up to somebody else. And hopefully it's going to come back in an approval. If it doesn't, then we'll have to make another adjustment and we'll move in a different direction. But this is the one we're going to try for right now. And then focus on the pain points of the need of why they need it, provide the solution for those points. So don't just voice them in terms of what they need, but also provide the solution, show the rates, and assume the sale. So if you look at the script in the academy, you're not just giving somebody a rate for $5,000 worth of coverage, blah blah blah. You're giving them a rate. You're giving 3 different rates. You're having them choose. So which one out of these 3 fits in your budget, is going to get done when you need done, that sort of thing. And you lay it out for them and then let them pick. Once they pick, then you simply say, and it says it in the script, okay, we're going to move over to the, I forget the verbiage there, but basically switch to a different part of the application where we start working on the application and you immediately start filling it out. Immediately start filling out the application. Now, is somebody going to stop you during the application? Sometimes they'll stop you and they'll say, hey, what are we doing? I didn't know we were doing anything right now. I still need to think about it. 9 times out of 10, you can actually get it through. And if there's going to be a pinch point, it's going to be on the banking information. I mean, you'll get all the way up to the banking information. And they'll be like, oh, well, hey, I don't have my bank account information. And it's like, okay, well, that's, that's a problem. We need that. But yeah, you just start filling out the application, assume the sale. And then once everything's submitted, everything's done, you're going to have the wrap up or follow up. You're going to say, hey, listen, this is my number. You can contact me at any time if you have any questions. Anybody else you know of that I can help out with? For those of us that are cross-selling, if you have Medicare, you can say, hey, by the way, I also help people out with their Medicare. Would you like me to give you a call during AEP, annual enrollment season? See if I can get you some additional Medicare benefits. So always do the wrap up and you include those cross-sell opportunities in that wrap up. But in terms of the sales process, what you're looking at on my screen is exactly how it goes. And you're simply going to start at the beginning, go all the way through to the end, and then you're going to repeat, go back and do the same thing. New client, new process. After you've done this a dozen, billion, zillion times, you are going to have it down like the back of your hand. You'll know exactly where you're at in the process, exactly what you need to do, and you'll just bing, 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 bing all the way through. And you won't have to think about it. You won't have to think about it. You'll just know. And this is on the Academy as well. So keep an eye out for that. Okay, sales scripts on the Academy. Like I said, if you haven't created your link, you should all have received the link to the Academy. Make sure that you have joined the Academy. If you don't have access, let me or Donette know. We can reach out to Zach, make sure you have access. Best Plan Pro. I don't know if everybody's using our CRM or not. I know that some people are, some people aren't. That being said, regardless of the CRM you're using, you can get Best Plan Pro. If it's not included in your CRM setup, then you can get it for $10 a month, just so you know. It's very inexpensive. Call control, make sure that you're maintaining call control, core building, underwriting. We've talked about those things, overcoming objections. That is on the Academy training module. Make sure I would encourage you to look that up.
Mm-hmm.
We're going to skip over this because that's on the Academy as well. Ethics, real quick on the ethics. Just because you can doesn't mean you should.
I mean, you should.
But we are in the sales
Wise
industry. We
words.
all have the ability to sell, which means we have the ability to bend people to our will, make them see our view, and kind of funnel them in the direction we want them to go. Always put the client's best interest first. Everybody wants to make sale. We all want to make money. There's no reason why we have to do it nefariously. There are over 8 billion people on the planet, folks, over 8 billion people. Somebody somewhere is going to want to talk to you and is going to want to buy the product you have to sell. There's no reason why you have to be misleading, exaggerating, or push somebody into something they don't need. If what you're offering doesn't work in that situation, just go to the next call. Just go to the next person. Don't waste any time. It's not a problem. Compliance above commission, never cut corners on regulations. Obviously, when it comes to FE, we still have some compliances. It's not as strict as Medicare, but we do have some compliance there. No pressure, no manipulation. It is really a take it or leave it proposition when it comes to final expense. I'm not going to. You are not, as an agent, expected to put up with verbal abuse on the phone. I mean, if somebody's talking to you and they're giving you grief, and you're not, I mean, obviously you can't do that to them, but it is a take it or leave it thing. So it's kind of like, hey, listen, this is what I'm calling for. I'm here to help you get this started. If it's something you really don't want, then I'm going to hang up and go to the next call. I mean, it's as simple as that. I'm just going to bow out. So I'm not going to try to convince you. I've literally told clients, when they've called, if you were expecting to get sold, if you're looking for someone to sell you, you've called the wrong number. You're talking to the wrong guy. That's just not what I'm doing. I'm educating people and I'm helping people get coverage, but I'm in no means going to try to sell you or convince you to do what's right by your family and get this coverage. I'm simply not. I can't care more about your family than you do.
Thank you.
It's
Mm-hmm.
just not possible. So I would encourage you to be, somewhat similar to that. Say, hey, listen, I don't need you, client. You need me. I am the professional. I am going to work with people who need me. I am not struggling. I'm not in need of, oh my gosh, I got to make a sale. Because anytime you're in that position in sales, you don't make sales. You always operate from a state and a position of everything's good and fine, and you don't need it. So have some integrity when you're selling, no misrepresentations, only sell approved products as designed. Where this comes into play? I'll tell you, especially when it comes to final expense. You're talking to somebody about an immediate death benefit. You filled out an application based on the health questions that they answered no to. You submitted it. They went to underwriting. The underwriter says, we're going to issue the policy, but it's going to be graded or it's going to be return of premium.
Mm-hmm.
What do you do as an agent? Because what some agents do, especially when it's over the phone, they've already submitted the banking information. They've already filled out the application. They say, hey, looks like we got you approved. The price is a little bit different. It came up about $10 higher, but that still fits in your budget, right? Yep. Great. You're all set up. Have any questions? Give me a call later. Click. And they don't even bother to tell them that it came back a graded plan, that their death benefit's
Mm-hmm.
not an immediate death benefit anymore, that they've got a 2-year wait for a full death benefit on natural causes, or that if they pass away, it's return of premium. They get return of premium of 10%. So that's where the integrity comes into there. When you submit that application on the immediate death benefit and the underwriter comes back, return or premium are graded, are you going to tell the client?
Oh,
Because you should let them know. You should tell them,
yeah,
hey,
yeah.
just so you know, you did get approved, but it came back a little
Mm-hmm.
bit different than what we talked about. Now, this is
Mm-hmm.
how it's different. Okay. So for the first 2 years,
Mm-hmm.
the policy years, it's going to be this. Okay. And I want to make you aware of that. Well, I don't like that. That's not what I want. I understand. I understand that I wouldn't want that either. However, due to your medical history, due to your medical
Yep.
records, your prescriptions, that sort of thing, this is going to be the best we can do. The best coverage we can get for you at this time. Well, can I do it later? Probably not. You can go with another company. You can call another company. You can talk to another agent. It's not going to change your medical records. That's what they're looking at. That's what they see. And so that's what it
Mm-hmm.
is. And this is still going to work out for you. It's still going to get you the coverage you need. You're not planning on dying the first 2 years anyway, are you? Well, no. Okay. Then we're fine. A little bit different on rate. Came back $10 higher, $8 higher, whatever it is, but you still got coverage. Disclosing that to the client takes integrity because you are going to be in a position there where you don't really have to say anything. And 9 times out of 10, when they get that in the mail, they don't know what they're looking at. They're going to get the policy in the mail. They're not going to connect the dots on graded or return a premium. And they're going to be like, I got my policy. They're not going to know. So do you do the right thing? Do you voice it? Do you tell them? Yeah, you should.
Yes.
You absolutely should.
Absolutely.
Okay. Uh, so that's a little brief on the ethics. Compliance, cross-selling. We don't have anybody cross-selling Medicare, do we?
I don't think
Anybody?
so.
Well,
Nobody's
Daniel does
cross-selling
Medicare.
Medicare. Daniel, you do?
Yeah.
Okay. Okay. So I'm gonna make this short and sweet. I'm gonna give you the simplified version.
48-hour notice. Yep.
Well, 48-hour notice has to do with, has to do with your Medicare, whether it's a walk-in or not. This has to do with cross-selling. You cannot in any way, shape, or form talk about Medicare in the same call, same appointment as life insurance. It has to be separate.
Yep.
Okay. Yeah. So if you sell somebody an MAPD plan at the end of the call, you say, hey, I'm buttoning it up. Here's my number and stuff. Oh, by the way, I also offer final expense services for people that need final expense. Would you like me to give you a call back so we can talk about final expense? I can either do that today, right now, in which case I can hang up with you and call you right back. It's got to be a separate call, separate conversation, or I can schedule it a day later, whatever. They say, oh, no, I want to talk about it right now. Great, no problem. I'm going to hang up with you right now because this call's recorded. I'm going to call you back and we're going to
Mm-hmm.
talk about final expense because it's going to be a separate call. So you hang up, you call them back, you're talking
Mm-hmm.
final expense, and they say, thanks for helping me out with your final expense. Well, how much was my Part B reimbursement on my MAPD? Do not answer that question. Do not answer that question. If you do, you're in violation, and a compliance
Mm-hmm.
officer will ding you on it because, once again, conversation's being recorded. So when they ask that question, say, hey, I can't remember what my Part B reimbursement was on my MAPD, to say, hey, listen, not a problem. I'm going to get you that information, but it's going to have to be on a separate phone call because right now we're talking final expense and we're going to button up this final expense conversation. And then I'm going to get you your information that you need on your Medicare. All right. Make it separate. Two separate calls, two separate conversations. Do not mix the two. They're like oil and water. You send somebody an email, you send somebody a text. Do not include final expense information with Medicare information in the same email or text. If you do, you are in violation. Okay. Yeah, 48-hour scope of appointment. If you're going from final expense, if you're going from a final expense sale, you just sold them a final expense sale, and you're going to do Medicare. Okay, you got the 48-hour rule that you got to remember. So you got to do the scope of appointment. So it's got to be, I can call you back and talk to you about Medicare 48 hours from this time after the scope of appointment. Let's see here. Yep, this is a compliance thing. You can say, thank you for allowing me to help you with your services today. Also want to make sure aware of the additional services we provide. We also offer assistance with Medicare final expense planning or maximizing your long-term care benefits. If somebody says, yes, I'd like information on maximizing my long-term care benefits, that is a annuity sale. That is an annuity callback. Okay, cross-selling at a glance. Keep life insurance with life insurance, health insurance with health insurance. So life insurance products can all be sold in the same call, same conversation. Life insurance products,
Mm-hmm.
final expense insurance, accidental life insurance, annuities. Those are all life products. You can
Mm-hmm.
cross-sell those, talk about those, same call, same conversation, same appointment. Health products that can be sold same call, same is ACA, Medicare supplement, Advantage plans, PDP, prescription drug plans, ancillary products, hospital indemnity, dental, vision, hearing, accidental health. Those can all be same call, same appointment. Just keep life with life, health with health. You're good to go. That is the Cliff Notes version of the cross selling. Any questions?
I like Cliff
And,
Notes.
and guys, I mean, this is just because you don't want to get popped by a compliance officer. So Medicare is highly regulated by CMS. They've got compliance officer that do secret calls and stuff like that, secret
Mm-hmm.
shoppers, and they're looking for agent. The moment they hear that an agent's cross selling, they immediately start monitoring calls and they're listening. They're looking for that stuff. So just
Mm-hmm.
protect yourself. Am I going to be upset if an agent calls me and says, "Oh, Jake, I messed up," and I said, "I think I might get in trouble"? I'm like, no. Listen, the reason why they're so hard on cross-selling products is because guys like me back in 96, 97, we used to go out and my manager at the time would say, "Hey, listen, we're going to market medical insurance, but our medical insurance from Mutual Omaha is 10 times better than any other medical insurance you can get because our medical insurance not only covers you if you get sick and go to the doctor, but it's got $10,000 in life insurance. It's got $350,000 or $350 a week disability insurance. It's got all those things combined." And so you go out and you sell this plan and you sign somebody up, and 2 months later, they call you up and say, "Hey, I canceled that health insurance you put me on, but for some reason I'm still getting billed." And you go, "Well, what do you mean?" They say, "Yeah, your health insurance cost me, $56 a month or whatever it was, and I'm still getting charged." And you say, "Oh, that's because I sold you a health insurance policy, a life insurance policy, and a disability policy all at the same time. And I told you it was all wrapped up into one thing." And it wasn't. It was three separate plans.
Mm-hmm.
That's how I was taught to cross sell years and years ago. And that's what we would do. We would go out and we would sell a health insurance product, and we would tag on life insurance and disability and accident and hospital indemnity and dental. We'd just add all that on and say it was all included. People had no clue. They got no clue. So they put an end to that, and you can't do that anymore. And like I said,
Mm-hmm.
I'm one of the reasons why it is the way it is right now when it comes to cross selling. So I simply tell agents to protect
Okay.
themselves. Just protect yourself. Keep them separate. And that's the short version of cross selling. All right. And then we know the compensation. We've already gone over that. Everybody here, become a master of your trade, folks. Learn your products. Focus on final expense. I understand there's lots of other different life things out there, lots of different things you can do with life insurance, blah, blah, blah. Hey, that's all great and dandy. Become a master of final expense. Everything stems from here. All those other sales come from this. You get really, really, really good at this, you can get into all that other stuff. And I've done a lot of stuff over the course of my career. So if you have a question about any of the stuff, I kind of have an answer. Or at least I can point you in the right direction. If I don't know the answer, I say, "Hey, go talk to this guy." When it comes to field underwriting, I will say this, using that Slack channel, that carrier help that Donette showed you is going to be invaluable. Zach, Daniel, those two guys there, they know when it comes to underwriting, field underwriting, they are like walking encyclopedias. They're going to know if you say, "Oh, so and so is taking this medication," they know what carrier, they know how they're going to respond. I mean, they're just really, really good at it. So I'd encourage you to utilize that. Um, and then when it comes to training, like I said, if utilize that academy, definitely go into that academy and do those modules. And then if you have any questions, you can reach out to Donna or myself, and we'll do our best to help you out or at least point you in the right direction. All right. And that's my story. So we finished an hour and 10 minutes ahead of time. We did good. We cut some time.
A lot of time, actually. Really, really great. Really great. We're getting better. Are
All right.
you guys
Anybody
still
have any
with us?
questions?
Yes, that was very insightful.
Yeah.
Thank you so much. I appreciate it.
All right.
Yeah, it's
Okay.
very
Well, thank you.
detailed,
Thank you.
very good. Thank you.
Absolutely.
Okay,
Thank you.
great.
Thank you.
Participation. Okay. Chrissy, I'm gonna probably get with you later to try to set up something, since you got that done.
And you
Okay.
got the recording,
I'll
right,
hit you
Donna?
up later. I do have the recording. I'm going to stop recording since we don't have any official questions.